Aloha, good morning. This is Caron Davis of Caron Realty International, and I'm very thankful to have Duncan back again. I'm sure you've seen Duncan on my shows over the years. Good morning, Duncan. How are you? And
Good morning.
just
Doing
good
well.
morning. And thank you. I know how busy you are right now. You're starting a new business, new business ventures, and you're so entrepreneur. Apart from being a mortgage broker, which makes you a more well-rounded business person to talk about mortgages, I feel, with the
I'm happy to do
finance.
that.
Yeah, the
Thanks.
finances out there. But just to refresh everybody's memory, Duncan was, a graduate of Punahou and Wharton Business School. He's been in business for 12 years as the president of Infinite Financial. And, whether he's helping, clients buy their dream home or helping them lower their monthly costs, Duncan really relishes the side of happy clients, and he really, truly is committed to the absolute best in what he does. And I'm always so thankful for everything you do for our clients too, Duncan. Thank you.
It's my
Um,
pleasure.
anyway, I know I've been really, really busy since the beginning of the year. And, I went to a seminar about a month ago, and they had an economist, and he was talking doom and gloom and telling realtors, don't worry if you're not making any sales. And I thought, what is going on here at this seminar? And so I thought I have to have you on because I want to know what's going on with mortgages. What changes have there been in the mortgage business in the last few months, do you think, Duncan?
Well, there have been some lenders that have actually gone out of business recently because of the volume has really slowed down in the mortgage business. The rates haven't gone up so much, more than doubling from the previous year in 2021. And, they're with the higher rates and fewer sales, fewer transactions, a lot of lenders have gone out of business, and a lot of loan officers have had to exit the business. But that's it's a cyclical business, and that happens from time to time. And after the shakeout, and as the cycle picks up again, then we'll see the people who've survived the downturn will be probably stronger than ever with increased market share from the lenders, the loan officers, the companies like ours that do a great service.
Yeah, so let me, I know what it takes in my business, in buying and selling homes for people to stay in, no matter what the market is. It doesn't matter. We're always busy. So as a mortgage broker, what does it take to go through the ups and downs of markets and still be successful and clients happy? What does a mortgage broker need to do?
Well, we have to stay on top of all the latest changes, and we have to offer a lot of different programs. So we offer a wide variety of different programs, and you got to be flexible to offer customers solutions that meet their needs. So some of the recent changes, mortgage brokers have to stay on top of because we have to be able to apply the correct solution for the customer. For example, VA loans and FHA loans recently reduced their fees. The VA reduced the VA funding fee, and FHA reduced the mortgage insurance. So those two changes make VA loans and FHA loans more attractive. So we're starting to see more VA and FHA loans, and FHFA that regulates conventional loans. They made some changes to their loan level price adjustments, which are basically the points that are added for mortgages for the conventional loans. They've increased those for a lot of buyers, a lot of borrowers, and some are a little better off. First-time home buyers with limited income have better. Sometimes they'll have better points and rates than they used to have. But a lot of buyers or borrowers are going to be worse off on conventional loans with these recent changes. So VA and FHA loans become more attractive. Portfolio loans, we've been doing a lot more portfolio loans recently, which is loans that are kept in a lender's portfolio.
Yeah.
We work with a lot of different lenders that do those loans, and a lot of times those are going to give you a better rate in terms than a conventional loan, especially on second homes and investment properties. The recent changes on conventional loans make those loans a lot more expensive.
Yeah.
So we're doing a lot more portfolio loans for those types of borrowers.
No,
And
absolutely.
just being a mortgage broker, you need to know which of the different programs makes the most sense for the borrower. You can't just assume that it's going to be the conventional loan or FHA or VA. It might be might be able to get better terms with a different product.
Absolutely, absolutely. No, it's very interesting how a very small portion, I know of realtors who successful in any market, and same with mortgage brokers. And it is, market knowledge is very powerful, whether in the finance market or the real estate market. And talking about, financing, finding out how to refinance, what ways can a buyer finance, you've talked about. And, with the Federal Reserve still, they're always talking about the rates maybe going higher and higher. What do you say to a consumer when you hear these things all the time?
Well, the Fed controls the overnight Fed funds rate. So that's different from mortgage rates. So for example, the mortgage rates peaked, 30-year mortgage rates peaked in October. The Fed has increased the overnight Fed funds rate by 1.5% since then. But mortgage rates have come down. They're more than 0.5% lower than they were in October, even though the Fed has hiked the short-term rates by 1.5%. So a lot of people get that mixed up. The Fed does not control the mortgage rates. They control the overnight Fed funds rates, and they're nearing the end of their hiking cycle. They've been hiking for the short-term rates for over a year now, and they're expected to finish that up in the next few months. So once they're done with that, the mortgage-backed securities and the long-term bond market is controlled by traders and investors, and they'll see that the Fed's almost done with their short-term rate hikes, and they know that. Everyone knows that they're nearing the end, so they're anticipating that later on the economy will be weaker. And we saw news today that Silicon Valley Bank is going out of business just within the last couple hours, and that's being shut down. And so as the banking system and you get see the economy weaken as a result of all the tighter monetary policy, you'll see a lot less inflation. And inflation is what really is driving the Fed to hike the interest rates, the overnight lending rates. And inflation has been coming down for the last 7 months in a row. We'll get a new CPI report on Tuesday. I think the inflation story is basically over. The inflation is caused by increase in money supplies. The underlying cause of inflation is the higher money supply. And what happened is during the pandemic, the government increased they gave away so much money to people who weren't working. They had all these big spending bills that flooded a lot of extra money into the economy, and that as a result, an elementary school kid could understand. You give all people all this extra money, the prices are going to go up. So that's what happened. So we had this huge spike in inflation. But last year, 2022, was the first year in 90 years that the money supply actually decreased. And so we've gone from where we had this big spike in money supply, which caused this big spike in inflation, but the inflation lags the money supplies, and the CPI report is a lagging indicator. So since we've had the money supply drop last year, we're with the lag, we're going to continue to see inflation drop. So as a result, the Fed is going to stop hiking the rates. Mortgage rates have been coming down since the peak, and I believe they'll continue to go down the rest of the year. It's not going to be straight downward, but I think the trend will be down. I think we've seen the peak in mortgage rates, and they're likely to continue lower the next year and beyond. So I think there's going to be opportunities for people who are buying now to refinance within the next couple of years. I don't have a crystal ball, I can never be sure, but from my understanding of economics and the money supply and everything that's been going on, I think mortgage rates are going to be lower. They're not going to stay where they've been, and they're past their peak. And even though the Fed is likely to continue hiking the overnight lending rates, the mortgage rates are likely to continue lower.
So, should somebody wait until the rates have gone down, or should they buy now? What's your thought on that?
I think if you find a property that you really like, it's a really good market to negotiate. It's much more balanced market than we had the last couple of years. You see some properties that have come down in price, or there's a lot of room for negotiation. Last couple of years, sometimes you had some that have dozens of offers on a property well above the asking price. And so it was, even though rates were a lot better then, that's part of the reason you had so many bidders. Now we're in a much more balanced market. So if you find a property that you really love, then if you can qualify for it, then it's better to buy it and then refinance later, because you're only going to have that rate for until you have to refinance it. But if you're able to find the property that you love and you qualify for it, then I would definitely do that.
You know, the biggest thing we have a problem with, of course, is the supply of homes. I mean,
right.
And that, you know, like you said, if you see something you really like, you should look at the options of buying it. I mean, I just recently put a home on the market that'll be open house on Round Top Drive, a little on 1.4 million. I've already got an offer above asking, and we've had 100 showings, Duncan, in the last 3 days.
Wow. Yeah,
So
there's so little inventory because a
there's
lot of people
100 showings, and we haven't even had open house. And open house is Sunday. So I've got 2 of my brokers sitting.
That's
And we even
amazing.
had the police show up at Brokers Open because there were so many cars.
Yeah,
So
when you have a really nice property that
yeah,
a lot of people are interested in, there's still buyers out there because
yeah,
there is such low inventory. You don't have many people that are ready to sell because everybody is locked into, or most homeowners either have gotten their loan for a long time ago with a much lower rate, or even just
yeah,
even just 2 years ago or a year and a
yeah,
half ago, they've got a much lower rate. So they're not going to want to sell and have to
yes,
get a new rate to buy a new place. So there's not much inventory, not many sellers. So when properties
exactly.
come up, there's a lot of demand, even though there are fewer buyers now because rates
Yeah,
are a lot higher.
yeah,
There's not a flood of supply like we had after 2008 when we had all these foreclosures where people couldn't afford to keep paying their all the negative amortization loans and things that just they made it so they couldn't qualify for the loan, or they couldn't afford to pay their loans anymore when things got a little tough in the economy.
oh
We're in
yeah.
a very different situation now.
No, it is. And, you know, I had a situation with a home up in Monolani Heights, and we're in escrow right now. And I could have sold that house 7 times over. And that was
Wow.
a little under 4 million. And it will be the highest sell in Monolani Heights, even in today's world. And yeah, you've really got to work with knowledgeable mortgage brokers or real estate agents. I mean, you really have to be with people who know what's really going on down on the ground, not up in all the economics of everything going on, but actually what's truly happening there out in the market.
Yeah, I had a loan that just funded today, where
Yeah,
the buyers came to me. The realtor said they're working with a different lender, but they're putting less than 20% down on a jumbo on a higher price property, 1.75 million. And they came to me, and I found out from talking to them that they had a VA loan on their house, existing house, and they thought they couldn't get another, they couldn't use a VA loan again. And I told them that they can. So I calculated how much their down payment requirement would be with the VA loan. Uh, they did use up most of their entitlement on that other house. So they
yeah,
didn't have enough cash to do the required down payment on the new house, but we were able to do it in combination with a piggyback HELOC, and they got great terms on both. They're
nice.
super happy that they're able to buy with much better terms than they would have with a conventional or a jumbo loan. Plus, when rates do come down, they'll be able to refinance a lot easier. With a VA loan, you don't need an appraisal, you don't need any income documentation. So
Yeah,
they're able to buy their dream house using a VA loan and filling the gap with a piggyback HELOC and making that work. They had gone to 2 other lenders
yeah,
that didn't know how to make it work. They could have
yeah,
gone. Most other brokers would have had them go with a jumbo loan, which
yeah,
would cost more because you can get a jumbo loan with less than 20% down, but the rates are a lot higher. So it made a lot more
yeah,
sense for this buyer, especially because the debt to income ratio was a little too high to qualify for a jumbo loan. So it made a lot more sense to go with the VA loan because they could qualify for it, get better terms, and just combine it with a piggyback HELOC to close the deal. And we closed in 3 weeks. So
And just to update myself, what is the new mortgage amount up to, what for a jumbo mortgage?
1,089,300 is for the conforming loan amounts, and above there, so it's gone up quite a bit from last
Sorry, that was 1090.
1,089,300. So
Oh, okay.
it's
Well, it
gone
has
up.
gone up a lot.
Yeah, it's gone up quite a
Yeah,
bit. So that
interesting.
allows people to use conventional loans or
Conventional
conforming
rates.
loan amounts to at a higher amount, and
Yep.
that sometimes helps a lot with the debt to income ratio if you're close, because you can go to
Yep.
higher debt to income ratio on a conforming loan versus the jumbo loan.
Well, we could talk forever on this, Duncan, but there's something very exciting we want to share for our audience this morning is, I mentioned that you're such an entrepreneur too, and you're always learning what's going on out there. And I'm such a big person for, the internet and technology, with real estate, it's so important. We have a full-time marketing director who does a lot of technology and internet things for us. And why don't you talk to us about what you've started? You're going to be educating people on a tool right now.
Yeah, ChatGPT, a lot of viewers probably have heard of it, but probably may not know much about it. ChatGPT is OpenAI's artificial intelligence chatbot. It's the fastest growing application ever. Reached 100 million users in the first 2 months. So I started a meetup group on ChatGPT that met for the first time last week. And I'm also developing an online course for using ChatGPT for business. It's amazing the things you can do with it. I'm using it to revamp my website. I used it to write a children's book for my kids. I used it to help me write a poem for my wife on Valentine's Day, incorporating my wedding vows. There's all kinds of really cool things you can do with it. I plan to use it for chatbots for internally to help our loan officers select which loans would be best for customers. So there's a lot of applications for businesses. I coded AI in college. When I got my systems engineering degree, I went to the same college as Elon Musk. So I have a strong interest in AI, artificial intelligence. And so I think ChatGPT is going to change the way people do business. And so I have this passion for it. So I'm spending some time when I'm not focused on the mortgage business, I'm spending some time developing an online course to help a lot of people to learn how to use it.
Very cool. Well, I look forward to, we'll have another talk on that, another session, but, moving along, the time is just so quick for us. It's so interesting, everything we're talking about. But what I wanted to do, of course, what we do every week is share Marianne's photos on the screen, and I'll just put her photos here. And today she talks about rainbows. Everyone loves, I must admit, I have a reel on a rainbow. It's got the most hits of anything. People love seeing rainbows. And of course, the rainbow here. And also it creates bird baths for our feathered friends, the light. And just gorgeous. Diamond Head turns from brown to green. And the rain, you can see that we talk about rain now. It creates waterfalls in the Ko'olau Mountains, which is absolutely gorgeous. And it makes for beautiful, moody sunsets. So there's a positive spin on rains and rainbows today.
Yeah, we actually saw a rainbow last week when the moon was up. So it was a rare.
Oh my God. Oh,
so
wow.
You could see the moon and the rainbow right above it.
Really? Do you have a photo? You'll have to share a photo.
I do.
Oh,
Yeah.
please send it. I'd love to. That'd be gorgeous.
Well,
thank you. Look, have a great weekend. And I know it's spring break for many, so enjoy your families in the next week or two. And Duncan, thank you so much for your time. I know how busy you are, and